Folks, today I'm going to talk about the top 4 S&P 400 stocks. These are the mid-cap stocks. They belong to a sector that holds stocks that are valued, or market capitalization of stocks that are valued between $2 billion and $10 billion. So before a stock goes on to be in the S&P 500, it first starts out in the Russell 2000. That's where stocks go, where their capitalization is between, say, $1 billion and $2 billion. Once they get above $2 billion, they're no longer a small cap stock. It kind of doesn't make much sense, because you would think a stock that's worth $2 billion, it's a pretty big company. But no, because S&P stocks are just so darn big. I mean, look at Apple, it's worth trillions of dollars. So the point is, the Russell 2000 has 2,000 stocks that are valued between, say, $1 billion and $2 billion. But then you have the mid-cap 400. And the mid-cap 400 is actually where the fastest stocks gain, because the stock gains the most strength when it goes from 2 billion to 10 billion. Once it gets to 10 billion or 12 billion and 15 billion, the stock becomes a large cap. And most stocks, not all stocks, but most stocks slowed their growth down. You will notice if you look at Netflix and if you look at Amazon, the biggest gains happened when the stock actually went from being a small cap to a mid-cap stock. And I'm always talking about S&P 500, NASDAQ 100. So today I wanted to focus on the top 4 mid-cap stocks. These are stocks that are valued between $2 billion and $10 billion. And these stocks are showing me that they have a lot of potential to the upside. So I'm going to give you some buy levels and show you what to watch out for. So the first stock is Etsy. Now, if you look at the profile of Etsy, you will see that it's an e-commerce site. The 3-year return, 543%. Look at these numbers. I mean, 5-year earnings growth, 300%, revenue growth over 300%, 5-year return, 617%. The stock is obviously growing very, very, very fast. Now, the stock is currently trading below the 50-day moving average, as we will see here in just a second. And when a stock is trading below the 50-day moving average, that means we don't want it. So we want to wait for the stock to trade above the say 123, 125 level. The stock has substantially more upside. This is a growth stock. It hasn't stopped growing. It's just getting going. This stock literally has the potential to multiply itself 100 times. I'm not kidding you. So I would start looking at the stock once it goes back to this price level, which is between 129 and 121. Do not buy it below the 120 level, because the 50-day moving average is at the 118 level. The next stock, and this is one of my favorite stocks, is Penn National. It's a gaming stock, and I think it's making a multi-year high. And let me show you the profile of this stock. It operates ownership, gaming, racing facilities, video games, perfect for the stay-at-home environment. And again, if you look at the numbers on this stock, 5-year return, 255%, 5-year revenue, 104%, 5-year earnings growth, 85%. It's a hot stock. And I like this sector, the hotel and gaming industry. Now, the stock is currently on a tear. This little pullback that we had didn't do anything, didn't hold the stock back at all. And again, this stock has the potential to multiply itself 20, 30, 50 times over the next decade. So it's breaking out right now. I would wait for a pullback back to the 58 level, maybe even the 52 level, but not too much below that. It's trading well above the 50-day moving average, which means it's a good buy. Next stock, Grubhub. Everybody knows Grubhub. It's trading below the 50-day moving average. Grubhub is a food delivery service, and it's really, really hot. And again, if the COVID-19, if we hear from Pfizer that the tests are not going as well, and we going back into the stay-at-home environment, watch out for Grubhub. Again, it's trading below the 50-day moving average. It's pulling back. I like the pullback, but I would wait for it to go back above and trade for a few days above the $73 level. I would like it like around here, around the $75 level. Again, this stock has a lot of upside to go, but I would wait for it to trade above the 50-day line near the $75 level again. And finally, the last stock is Williams-Sonoma. And Williams-Sonoma is an interesting stock, and it's trading above the 50-day moving average. It's a specialty retailer of high-quality products for homes. Now, here's the interesting part. Mortgage rates are going crazy. People are buying homes like there's no tomorrow. They're refinancing homes. What do people do when they buy and refinance homes? they buy things for the home. It seems like all the money that was going into commercial real estate is going into residential real estate, and Williams-Sonoma, Pottery Barn, West Elm, all these home improvement, not improvement, but high quality home product stores are doing well. The stock is solid, 3-year return 84%. This is while the S&P is making 6% a year. This stock is making 33% a year, 84% every 3 years. I mean, it's killing it. Revenue's growing, earnings is growing, dividends is growing. That's big. And again, as I said, the stock is trading above the 50-day moving average, which means it's a buy right now. Let me give you a good buy level for entry. Ticker symbol Williams-Sonoma. First stock was Etsy. Second stock was Penn National. Third stock was Grubhub. Finally, we have Williams-Sonoma, ticker symbol WSM. And if you're looking at buy levels, I like the buy level. I personally would put a buy stop at the $96.70 level, $97 level. Kind of like where it is right now. I like the fact that it's above the 50-day moving average. And if it starts trading below the 50-day average for a few days, just dump it. It's not worth it. It'll go up again. And this stock has a lot of upside potential. So these are the 4 mid-cap stocks I like. And I believe each and every one of these stocks, I'm almost positive, is going to be an S&P 500 stocks. But then the market cap has to go above 10 billion, usually about 15, 20 billion. And I think the next stock that's going to make it into the NASDAQ 100 or the S&P 500 is going to be Tesla. That's just my 5 cents. But for now, keep your eyes on Etsy, Penn National, Grubhub, and Williams-Sonoma. And I hope you have a great day. Folks, I probably sound like a broken record since I've been talking about these stocks all week. But Wall Street veteran Adam Sarhan and I just revealed the next Alpha Line stock that's set to skyrocket. Adam's alpha trades are known for soaring in 24 hours. Sometimes a few days, but sometimes 24 hours, but it's not day trading, giving you the potential to see gains like 289%, 456%, or even 1,950% in a couple of weeks. Man, I love it. Just take a look at the past trades that crossed the alpha line. Readers recently scored 321.62% from DocuSign, even 531.06% from Amazon. What are you waiting for? Click on the link below to get your Alpha Line trade now.